Hey traders, this is Okana here. I'm going to show you a quick strategy, very powerful strategy by the Geek, also known as Michael from binaryoptions.sock.com. I will put the link below, so go check it out. It uses only stochastic and uses price action. That's why I like this strategy very much. And it's good for the people who like to do higher time frames, higher expiries, because I've been sharing a lot of short expiries, 5-15 minute strategies lately, but here's a long-term strategy. So let's move on and quickly go through this. So the first thing you want to do, set up a chart on the weekly time frame and use the stochastic oscillator. And you should already know about overbought, oversold, and the KD line. For example, when the K line, the green one, crosses from above below the D line, that's a stronger signal, especially with when both of them are dipping. It's stronger than when just one of them is dipping, or like in this case, both of them are going up, strong buy signal. And you can see the candlestick, also a big one, bullish. The bulls are strong, so you should already know these things. If you don't know, look in our channel. I have explained how to draw support resistance lines and how to use the stochastic oscillator. Because you need this, you need to go to your weekly chart and go back a few years, like a 5-year chart or something like that, and start placing support resistance lines. You should also know how to do that. For example, like this, support here, support, support, so one line here, and then we got resistance, resistance, the breakout there, some support here. So we place our lines based on support resistance, as you can see here. And then once we've done that, we have our targets, because that's how we use these support resistance lines as targets. And then you can see in this case, price is moving down, so we have a downgoing trend, because lower highs, as you can see here, lower highs. So you place a trend line, either like this in this case, but then you can see that you could have adapted it to recent price, for example, like this in this area in this case. So you have to readapt, you redraw your trend lines, but you don't even need this, because you can see with the naked eye how price is dropping. So let's find an area, for example, here. The first thing you see, you want the stochastic to start moving down, so you're sure price is trending down and not going to break up. So on this candlestick, once this weekly candle closes, you can see the K period line is moving down. So once this candle was closed, this weekly candle was closed, we put an arrow there. It was confirmed that price was moving down. So we got the lower high, we got the stochastic moving down, and we have our resistance line holding. So our next target is the support line. So we're going to go to the daily charts after this and take a signal for a week or several weeks, depending on how far we are away from the next support in this case. So when does our signal come on the daily charts? Well, it's not here. You can see it was oversold and price was moving up here, so we don't want to trade yet. So we would be waiting for price to start moving down, and on this candlestick here you can see price is finally moving down again. So this would be your signal to take a weekly. In this case, I wouldn't go more than a week or a few days, because we are so close to this support line, and you can see it took only 2 candles earlier. So this is what you have to do. You have to analyze earlier price action, so you understand how long expiry you need. And you could see that on this candle, before it took only 1 daily candle to reach the support, so you don't want to give it too much time in this case. Again, support was very close. So let's also look at the buy signal, and then we will wrap it up. So in this case here, you can see again, if you place a trend line, price was trending up. Can see this here, boom, boom, and so the weekly is oversold. So we want a higher low instead of a lower high. So remember, we had lower highs before for put options. Now we have higher lows. So let's place a line here. You can see the stochastic was moving up strongly already here after touching support here. You can see this, but then it fell, it dipped again. And then here it's both the K and D line are moving up, so strong signal there. So now you want to move down to the daily charts and locate that area, which is here. So now you can see on the daily chart where our signal on this support line that we have here, this support line, and also our trend line, by the way, you can see it was touched precisely, and then stochastic, both lines started to move up. So a very strong signal here actually. So in this case you could have taken more than just a week of expiry, because you see the trend is strongly going up, and you can see the last time it touched the trend line, last time it went up from the support was an entire month, 4 or 5 weeks. Price was just bullish moving up. So again, you could have gone in for a month or 2 weeks or something like that. So that's how you do it. You look at the price, and of course you could have taken the next trade here at support when price was moving up again, because you have your target. But be careful when price has recently touched the resistance and it's very close to it, then price might continue down, so the trend might reverse. So you have to take these things into consideration. Go to the weekly time frame and look, make sure you're not that very close to a resistance when you're taking a call option, or very close to a support line when you take a put option. So take those things into consideration. Also recent price action, so you know how many candles you could use for your strategy. Okay, leave a comment below. Don't forget to subscribe and like the video. I will put the links below in the description for the article. Go and read it so you find out exactly all the details. And thanks for watching.